Hello, my name is Raitis, and you're here at Farewell Total Return Investing. And today we're going to do another evening commentary. You can see I have already my blue light blockers on, red light is already dimmed, and then now we can get into the evening commentary, guys. Today we had CPI news release, which was very interesting, and we saw some nice volatility. So let's quickly jump into the markets now. Let me show you, first of all, of course, DXY. DXY spiked higher above previous day's high and then traded lower. Again, we're trading around this daily fair value gap. Yesterday we closed below it, and now we're seeing follow through to the downside. But of course, I'm still neutral, and I literally do not know where the market wants to go. But T-note futures, you have to give yourself applause if you followed my analysis. Our analysis played out wonderfully, and we have reached our target on T-bonds. So that's extremely beautiful. Again, we have our go and look at the weekly forecast. We already talked about this playing out right there. We talked about shorts on T-bonds. Again, we have this retail pattern, head and shoulders, open float liquidity resting below this and this low. So we have hit our final target. Now market can even trade down back below this low. I have still some positions running from way up here, and I scaled in already at the daily fair value gap, and then I scaled in more here as we traded lower. So wonderful analysis, guys. Give yourself a tap on your shoulder if you participated on these shorts. This is a wonderful analysis where we have a false retail pattern. And if you want to stay up to date with the most and exclusive insights on the markets, please join my Discord channel, which is in the link in the description below this video. We are relaunching it, and then I hope I will see you there. Now let's continue. Again, 5-year T-note futures, again, also below this low. 2-year T-note futures, again, are the weaker, what you call, pair you want to trade, because we had S&T divergence. You can see we made a lower low right there and a higher low on the 10-year and 5-year T-note futures. So this would be ideally the leadership market for shorts. Of course, this makes no sense if T-bonds are bearish and DXY is bearish. That's why it really makes no sense. But the only thing why it does make sense is because DXY is inside a consolidation, and T-bonds are trending, but DXY is not trending because DXY is inside a consolidation. We're taking out buy side, we're taking out sell side, and market is basically in a seek and destroy profile for this week. I mean, you can see we're just running out buy side and then sell side. And then again, we're reversed from here, taking out buy side again. So you can see market is just building narrative in the first month, and then we will hopefully get clear price action, but this is not the move I anticipated on DXY. We're still stuck inside this range, but we got our follow through on T-bonds, and that's at least a good news for the week. And again, I had another trade today, which is currently still running. Let me go quickly into that. The euro is, again, let's look at the CFDs. Again, bullish because DXY is bearish, and then pound also bullish. USD CAD, bearish. AUD USD. NZD USD still kind of bearish with a down close candle. Of course, we had this reversal and spike lower. Also consolidation, and then USD JPY is heavily bullish because T-bond futures are tanking lower. Now gold also had a spike lower today, and we completely recouped and re-delivered this whole spike from the daily order block. which we outline on the weekly outlook, and our target is 3,000 for gold futures. So again, nice delivery, displacement from key higher time frame level. Let's see if we had actually a divergence with silver futures. That would be actually ridiculous and a nice trade, which I didn't trade. And look at this, guys. Oh my goodness. So this is silver up here. Silver was actually leadership. We had divergence going into New York session. And again, this is a protocol I talked about yesterday. Come on, guys. Come on. Come on. Like, this is too beautiful. We had divergence going into New York session, so we don't expect any run on sell stop. Gold sees H1 stop run into key higher time frame level. This place is higher. Let me quickly look for silver futures. Yes, wonderful. And do we have a daily PDRA here? We do have this daily fair value gap. I just want to quickly break down this trade. Maybe some of you guys even traded this trade. I don't know. Let me know. Wow, 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 wow. Displacement from consequent encroachment of this daily fair value gap, and then okay, now entry is pretty tricky because it didn't deliver any retracements. Now gold, we had institutional order flow entry drill. Yeah, so okay, I must admit entry could have been, you could have been buying this order block right here. You would have been filled. Yeah, but okay. You could have been also been buying because we saw a displacement from key hard time frame level yesterday, and you could have been buying the retracement into, let's see what we have, 30-minute order block or fair value gap, or what do we have else? Oh, a nice 1 hour fair value gap, which is pretty clean, which is also a balanced price range. Now, why doesn't it let me delete the studio? Now, I don't want to get too exaggerated on this trade, but this would have been a nice trade. Market spikes down under the equal lows at CPI. Stop loss would have been, and let me go on a 30-minute time frame, so below rejection block, or 15-minute time frame below this fair value gap. Yep, we're here at under the rejection blocks. Wide stop loss, but then target would be these relative equal highs for 1 to 3 risk to reward ratio. And yeah, that's it. You can see displacement was heavy on silver because we had the divergence, and leadership was on silver. Gold was sympathetic against silver. So this was a nice trade, guys. And again, we also outlined the consequent encroachment of this 4-hour fair value gap for longs. Going from the weekly outlook, go and check out the weekly outlook if you don't believe me. We had this as our invalidation criteria for longs, and then what should I say? Just watch the video if you haven't already. Now let's get into my trade on ES, which is currently still running. You can see F stops move to break even already. Now let me, yeah, so this was like that. How was the trade framed? I traded after CPI, of course, not before. Would be a little bit stupid to do that. Now we saw displacement from, so we had this massive drop on CPI. We left relative equal highs right here, which is my H1 liquidity draw, and 4-hour liquidity draw is still up here. Now from a, let's switch back to 1 hour time frame. We had a stop run below H1 sell stop. Market trades into key hard time frame level. We seeing institutional sponsorship from this level. Now, I failed to enter my trade at this 15-minute fair value gap because I wasn't watching out for this trade, and I was busy. So this would have been the ideal trade. Now stop loss would have been right here. which would have been also a much better risk to reward ratio. If I would be holding for the highs like I'm doing right now, 4.76 compared to 1 to 3 or 2.88 if you want to be precise. So yeah, I missed this one and then I re-entered. The only key thing is that we traded into also key higher time frame levels, so market could have ran below the low. This would be a reason why market could have hit my stop loss. Now YM did run lower and took out sell side below the rejection block. But YM is the lagger. We didn't see any institutional displacement. I mean, only a little bit, and then we rallied, of course. You could have traded that, but then we distributed from this key hour time frame level again, as I talked you through on the S. Same thing can be seen on the NASDAQ right here, traded below a 5-minute sell side liquidity pool, and then we distributed some shorts, longs up there. Yes, this is the trade. Of course, NQ showed a much more higher run, but why did I choose ES? Because, and even NQ had, no, I have T-bonds right here. That's not what I want. NQ had also leadership from SMT divergence perspective. You can see we have kind of relative equal lows while ES is making a lower low and YM is making a lower low. But NQ didn't have really a key hard time frame level it was rallying from. Of course, you could have outlined this imbalance and this was your key high time frame level, but I didn't see that at the moment I was trading, and I chose ES because we had this nice confluence of a monthly and 2 weekly levels. And then we saw some nice displacement, failed to buy this fair value gap, but then re-entered on this 5-minute fair value gap right here. And that's my trade. I don't know. We have Trump speaking today. Let's see if it can bring some volatility. And then at 3 p.m. we have some more volatility coming in. So let's see. Stops are at break even. We're risk free, but I didn't take any partials. First partials would be above this high. And yeah, that's probably it for today. Now, what was good is my risk management. Really, really good again. I'm really applying the things I tried to show you on X from my journal entries. Again, reflect and see how fast you're blowing your profit challenges. Again, we talked about this yesterday in yesterday's video. Probably if you blow your challenges in 1 or 2 weeks, you have a risk management problem. And then again, you have to go in with the mindset that you are losing the trade as you put it on, and then ask yourself and envision yourself going into drawdown with this risk you're willing to take, and then ask yourself, are you really do you really want to risk that much? Probably not. So yeah, smaller position sizes, you will have fewer emotions attached to the trade and you will be much more relaxed in your trading. And I mean, don't fall for this social media illusion that you have to pass your trades in 1 week or something else. Like, this is pure illusion, disillusional, and yeah, just take your time, treat it as a real challenge with proper risk management, and then nobody says you have to pass it in 1 or 2 weeks. Nobody. You just have to take your time and yeah, treat it as you would have had already the funded account, and then trade the challenge account as you would do as you would trade your funded account. With that said, I hope this lesson was insightful. Again, we have applied our protocol because we had SMT divergence going into London London closed session. That's why we didn't look for any further runs below this low after we saw institutional sponsorship. Again, London closed protocol. We discussed this literally yesterday, and you can see it applied today again. And we also shared the gold trade breakdown, which was also beautiful, which I didn't trade. I'm only in this trade right now for the day. And I wish you a pleasant evening and a pleasant week. Tomorrow I might be trading. I don't know. I have to look at price action. I'm really up a lot for this week, and that's why I'm really happy and content with my performance and profits. And that's why we will see if market presents any opportunities. But Friday is definitely a no-go probably for me. We'll take this day off, but let's see what Thursday does. And then with that said, I wish you a pleasant evening. Have a good night of sleep, and then we will see us tomorrow. Stay safe, trade safe, and bye.